Good evening, everybody. John Seville, Acorn Wealth, and it's executive summary time. What a couple of days, well, a couple of weeks even. It's been awesome. Let's before we get into kind of the new stocks and what we have to talk about tonight, let's take a look at the index and let's cycle back a couple of days. I mentioned on Thursday that we had basically broken open range for the first time, and this meant that we should be going down, that we were also in a descending triangle formation, and that we should be going down. And I talked about 2070 as to 2075 as the target on the S&P 500. We talked about the fact that the money flow was breaking negative, all of these things. And of course, what have we seen? Exactly that. 2 magnificent days down for anyone playing the short side on the SPY or any kind of correlating stocks that have been dropping with it. So lots of money to be made there in the shorts. What I thought, though, was, before we move off that, we should be kind of testing some support down here. This will be a confirmation of the descending triangle formation. You can see here, we project that down. So we're looking kind of down into that 2065 to 2070 level as where we'll should probably get some support zones. Now, what I think has been really amazing, but really exciting to see, I shouldn't say amazing, exciting to see is that despite that, all of these longs that we've been playing have all been doing awesome. And this is why I don't think it's a stock market, but a market of stocks. And the test of a truly good strategy is, can you make money going long in a short market, and can you make money going short in a long market? I believe that stocks have their own personalities, and the purpose of a good strategy is to find stocks with those personalities that will move on their own regardless. Let's have a look at some of the stocks that we've been highlighting last week as trades. DSCI, one that I was in on. We talked about that having this beautiful kind of rally up, and I'll just uncomplicate this a little bit. We can see that it had that perfect formation. It rolled off the moving averages and straight up, going up from that 680 zone that we had highlighted an entry point for, straight up today, hitting that target we'd pinpointed around 755, completing also a flag formation from this bottom. So this one just surging upwards. DSCI, one of those longs from a previous executive summary. FGen. From last week's executive summary on Thursday, FGen surging 12.45% today. This one did awesome. Let's look at EGLT, also from the executive summary last week. This one surging 9.95% today. I don't know if anyone here in the audience likes 10% in 2 days, but I have nothing wrong with that. If you can do 10% a month, you are beating most hedge funds in the world. So this was really good to see. This one's probably got more room to go, in fact. ATRA, also one that I was playing along, have been and still hold. This one's surging up from where we picked this back around 38, hitting a high of 46 today. Let's move further. MTRX, also one from the executive summary. This one going up 5%, well 4.09%, but 5% intraday, and just pulling back today to support. All stocks that have been moving completely against the grain because they have their own personalities. This is exactly what we want to look for. So going over to the longs first of some stocks that some additional stocks, because all of those still look like they've got some bullish action left. MTRX doesn't look like it's finished, but AMBRA, this is one that's just starting to consolidate. So if we can see a confident break here, going up through and breaking the high of 735, so going up, say, through 737, this could have a nice bullish action up to its moving average here, which we can see comes into play around 820. So that would give us a nice, again, about 10% potential profit. So we're looking for a break there of, I'd even go 739. And then I look at the stop criteria just around here at 677. And then again, looking at the target, we can confirm using Fibonacci's. Have a look at the low and high and break that down. You can see the 50% Fibonacci comes right in around that 827 level. So I'd be looking at 817 as the target there. And as soon as we start moving upwards, I would start moving that stop loss up. Okay. We've also got SNTA. Now, by the way, this one has some decent. If we look at AMBRA, you'll see that it's got insider buying, some across late last year. But more interestingly was actually the institutional buying. You can see we've got a slew of all different institutions that hold positions in this, buying basically around the same time back in February. So if we go back, this was at higher prices than we're currently at. So this could be a nice little recovery, and could even go further than that. So that's one for the long. SNTA, this one's been having a nice pump, and again, if we go to the insiders, we can see that we can see on SNTA we've got insider buying of substantial levels, and this is from the directors and CEO. That was kind of in early October. A little bit of selling from an institution. But nevertheless, this has got some bullish activity. You kind of see a possible pennant formation forming here. And I'd be looking at this as a long from kind of where we're currently at. I'd even looking to be getting a little bit cheaper possibly, but somewhere around $2.40 as a potential quick little rally up just to this level here of around $2.59. Now again, these are all kind of momentum plays, so we could get more steam from them than that. And we have a look at the support line. You can see the support coming in from the 9-day moving average. So I'll be looking at 229 as the stop loss. Okay, so all momentum plays. So these can be treated, and I often do, with just letting them ride. But those are my immediate targets. UGAZ. This is a lot more speculative because it's a triple long on natural gas. Now, natural gas has been under a lot of pressure, but this is just starting to turn around with good money flow coming in from underneath. Bullish close here on the candle, up 13.56% on 50 million shares, over 44 million yesterday. This could be just an easy little pop to where the 50-day moving averages is at 220. So from $2 to 220, I mean that's 10%. So that could be a nice little play. Now the other moving average then comes into place at 240. So there's that kind of a higher level which it could get to, but that's the natural gas. Okay. KRNY is another one on my watch list. This has an 8% short float, and you can see it had a huge drop and is now just starting to potentially recover. So again, I'm looking for a break above the 9-day moving average here at 11.02. So I'd be looking at 11.05, and I'd be looking at a rally potential of moving up towards this 11.60 zone. So we're looking at about 6%. So 11.05 up to say 11.57. That could again potentially go further, and I'd treat that with updating the stop loss. My initial stop would be just under the low of this candle, which would be at 10.72, so looking at 10.69. So as momentum plays, these are all roughly about 2-to-1 risk rewards. The rest are really just stocks that we're already following. I mean, things like SGI still doing really, really well. That's continuing to go since the executive summary. Another one of those recent winners. ENZ, another one from executive summary. This one's still charging along. Still looks good. Nice hammer candle. I mean, there's so many of these that we've had from these executive summaries that are doing really, really well. So let's have a look at the short side now. Again, the short side of the market, seeing as we're breaking down, I'm looking for strong momentum plays to the downside. The first of which is American Express. This one's had heavy insider selling, and all of these do in fact, and you can see it's just broken support. Volume jumped from 4.8 million to 5.88 million. This could be just a quick little play down to support here at looking at 77.22 as a target. And for an entry zone, I'd be looking for a break of the low of today at 78.80. So just a very small play, probably more of an option type of thing. On more of the stock side, let's have a look. Firstly, NVRO. This has huge insider selling. Just check this out. And this, I believe, was reported today. NVRO. So yes, reported and purchase and sell date of today. And we're dealing with some sizable transactions here. Not massive, but all from different people, and you can, especially the sell here, 47 million shares being dollars worth of stock being sold here at from Johnson & Johnson Innovation. So NVRO, this could be a decent drop, and as we see. Basically, we kind of throw in those moving averages. We're looking at a breakdown here. I'm looking for a rally up to here, which is at 48.79, or a continuation break of the moving average, which would be looking at a basically 46, basically a breakdown from 46.85. Okay, and then in terms of targets, I mean the money flow is coming right out of this little one, so this could be something that's got a lot more pressure. And if we look at the overall downward trend, you can see that 45.22 might catch it, but obviously we're looking for something a little bit more impressive. This could drop all the way down to kind of the 61.8 at 36.80, but again, I would just simply keep lowering the stop loss as it passes through those different Fibonacci's. So looking at a target basically there of 36.87. Let's just see how that coincides there. So we've got a gap fill with the gap fill at the 50. So that would actually be my first target there, considering the 50-day. I'd be looking at that area here of 41.73 as my first target. And then the second target, we'd be looking down at the 61.8. Okay, another momentum stock to the downside is ABC. You can see this has just had a really long sustained uptrend, but money flow has been coming out of this and diverging ever since it peaked. And if we have a look at what the smart money was doing, we can once again go over to the insider, ABC, and you can see we've got broad-based selling of sizable quantities here all throughout the year. And this is all basically up and around this price where it's currently at, 113, 115, 114. Have a look at the institutions. We also see kind of nothing really there to be concerned or excited about, but the insiders certainly seem to be getting out. So this I would be looking for, again, a rally up to its moving average around here at 111.60. So a rally up to that, or a breakdown below the low of today, which is 110.21, so looking at 110.13. And in terms of a target, I mean, these are momentum plays, so these can really, really drop. But the first level I'd be looking at is this extreme resistance, which could be extreme support. Looking at that coming in here around $100.73. So there's a decent drop, and on all of these I'd be looking at the stop loss to be just above where you see that kind of previous resistance as well as the moving average resistance, which brings us up here to around 112.76 on this one. So very decent risk reward on that. Second last, HLT, Hilton, insider selling. Descending triangle formation, looks a bit like the S&P 500, and had a big down day today, 14.5 million shares, over 6 million yesterday. Also testing its moving average. This would be a drop Looking at there from a break of today's low. So looking for a break of 28.57. Because we do want the triangle to confirm. Or we could, or a little more risque move would be a rally back up to 29.29, where that resistance is. And I'd be looking for a breakdown of this one to come all the way down to where we see these two kind of levels converge right around here. You see there's two this horizontal and this trend line. So that first target and the 200-day moving average, that all kind of comes into play right there at 27.23. So roughly about $2 if you get it on the higher level, or about $1.30 on the lower. And last, again, these are all momentum plays. You can still adjust stops and let them go longer, but this is just having a plan for where it could get to at least. Texas Instruments also had insider selling. There you go. You can see that coming in. Decent sizes. Price $57. Not much higher than where we're currently at, so that's decent. Institutionals, we can see we've had a little bit of selling. Kind of mixed, though. The insiders are more what I want to be looking for. And so this could be a decent short from where we're currently at. It's already broken the 200-day moving average, so this is something that I'd be looking at it with any kind of rally in the morning, as we may get on the S&P, or just so kind of anything below 53.52. And I would just, again, I'd just be putting my stop loss just above that 9-day moving average at 54.50. And let's have a look where we're at. So 53.47 is kind of where that level is. So anything under that 53.47. And then from a target standpoint, I mean, this could literally kind of really get down there. So I'd be looking at this level as the first kind of target in mind, or a checkpoint, right around $49. Okay, so lots of opportunity, and I hope everyone does awesome with that. Now, if you haven't already found out how we select such awesome opportunities and how we've been doing so well, I'd invite you to attend our workshop, which is happening tomorrow, which is Tuesday, June 9th, at 4:30 p.m. Eastern. It's a free workshop where we'll be teaching how to identify when trends end and begin, how we spot these types of powerful trends, and what oscillating and momentum markets are all about, and how we tie that into high probability trading patterns. And of course, something we talk a lot about, the smart money. So if you are interested in attending, I hope you will. Simply register now at acornwealthcorp.com/event. And space is limited, so do make sure you register now and also arrive at least 5 minutes early for the event. Okay, so we'll see you all tomorrow. I can promise it's going to be a great event, and we'll be talking about a lot of these live positions and taking questions. So we'll see you all there. Happy trading, and good night.